SoFi stock has been on a huge run for the past 2 weeks, gaining more than 25%, which is funny. Because when I made this video just 2 weeks ago, I was told that SoFi is complete trash and I am wasting my money. Suddenly, I'm being asked once again, is SoFi stock still a buy, and how high will SoFi go before they release earnings? If you follow this stock, then you know just how much SoFi is growing. But for most of 2024, SoFi stock has been dropping, despite the company doing better than ever and making better profits than ever before. So what is going on? Remember that SoFi earnings call is only a few days away now. So in this video, I will try to explain what is going on with SoFi and what we can expect between now and the earnings date. Now we've got a lot to get through in this video, so I will try and keep this intro short. But if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence and try to answer the question later in this video. But for now, let's get straight into it. First of all, what is SoFi? So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now, I see so many people commenting on SoFi, calling the company a startup and treating this like a company that was just founded. But SoFi was founded more than a decade ago in 2011, and a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on Nasdaq. It's still a growth company with huge potential and still at the very early stages and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very, very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. SoFi stock is considered by many as a strong buy because the stock looks deeply undervalued from the forward PE perspective and when compared with other fintech companies. So as I said at the start of the video, SoFi stock has been on a huge run for the past 2 weeks. This is right up until Thursday when the Biden administration announced plans to forgive $1.2 billion in student loans for 35,000 borrowers. Now, this really should not have such a huge impact on SoFi, but it does still have an impact on the share price for a few reasons. But as it says here, in the last 2 consecutive quarters, SoFi has shown improvement in their financials, achieving GAAP profitability as promised by management last fall. Promises made, promises kept, said Seeking Alpha analyst Noah's Ark Capital Management. Despite the positive shift, shares continue to face downward pressure. This is likely caused by speculation over potential loan defaults and deteriorating credit quality within SoFi's asset portfolio. I believe this speculation is incorrect and misguidance. Now, this is something that I will talk about a bit later in the video when I show a compelling argument for a much higher share price than what Wall Street analysts are giving. Now, if we look at the investors presentation for just a moment, we can see the new member additions has been steadily increasing quarter after quarter, as too new product additions and the number of Galileo accounts. In fact, there has been huge growth in lending products and financial service products over the past few years. Everything is pointing upwards for this company, but the share price does not reflect this just yet. In the last quarter, there was a slight drop in quarterly adjusted net revenue and quarterly adjusted EBITDA, coming from an insane increase the quarter before, and management has been very prudent with lowballing guidance for the coming earnings report. Now, the last time I did an earnings preview video on SoFi, I was spot on with my predictions on all the growth figures as well as the revenue and EPS prediction. If you would like an earnings preview over the next couple of days, then drop a comment below and let me know. If I get 500 likes on this video over the weekend, I will make an earnings preview on Monday. Now, this is very important, so listen up. There have been price target cuts. SoFi saw the following two price target cuts on July 9th. KBW lowered their price target from $7.50 to $7, while Barclays also lowered their price target from $10 to $8. Ironically, the stock hit a low of $6.15 and immediately started trading upwards. KBW is adamant that SoFi is facing higher loan defaults, leading to the decision to cut price targets to only $7. The analyst firm thinks that SoFi faces a steep rise in NCOs, leading to cumulative losses over the life of loans, higher than 7 to 8% targeted by management. But this was addressed at the Mizuho Technology Conference on June 12th, where CFO Chris Lapointe was adamant the fintech was staying within those loss targets. In fact, the CFO seems to suggest recent loss ratios are better than those expected. Stating here, we have over a decade of experience in underwriting high quality credit. In addition to that, we're seeing really favorable trends in some of our most recent cohorts. You would have to step back to 2017, which is the last time we saw life of loan losses that even come close to 8%, but it was still below 8%. If you want to take a look and listen to this, there is a link to this in the video description below. Now, this is a very interesting article on Seeking Alpha, and I highly recommend everyone to have a read of this in full because I'm skipping right down to the end, but there is a link to this in the description below, so check it out. SoFi is a profit machine. The confounding investment story with SoFi is that the company doesn't have a history of loan losses and loan valuations impacting the financials. SoFi is now forecasted to grow $1.2 billion in adjusted EBITDA in 2026. The stock only has a market cap of $7.4 billion. Now, this was written just over a week ago, and the stock now has a market cap of $7.9 billion, but the exact points that are made here are still very relevant. The consensus analyst view on SoFi is absurdly negative. Though the average price target is for 25% upside on an $8.75 price target, the average rating is still a hold with only 5 buys amongst 18 ratings. SoFi has targeted compound 20 to 25% revenue growth through 2026, yet the average analyst has a stock trading at 8.5x 2025 adjusted EBITDA targets. Analysts have adjusted EBITDA tipping from the $432 million generated in 2023 to the updated targets of 2026, making the valuation multiple practically unheard of in the stock market. In reality, SoFi should have the following 12-month price targets based on a 2026 adjusted EBITDA target of $1.2 billion and the above growth rates. 15 times adjusted EBITDA equals $18 billion market cap or a $17 price target. 25x adjusted EBITDA equals a $30 billion market cap or a $29 price target. And the key investor takeaway is that analysts are obsessing with SoFi loan loss rates, yet both the CEO and CFO have publicly stated that the company is on track to hit prior targets. In fact, the analysts should be more bullish on the future, with suggesting the fintech is likely to ramp up lending products into 2025. Investors should continue using weakness in the stock to load up with logical price targets for above $7. So what do you think of this? Are you still bullish on SoFi stock, or did you let the bearish sentiment over the past month affect what you think about SoFi? Did you miss out on the huge run over the past 2 weeks because of all the negativity in the few weeks before this? There is a lot of talk on social media about SoFi, but always do your own due diligence. Remember that I'm not a financial advisor, this is not financial advice, so always do your own research. But if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next